Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 22nd of December 2023. First chart is the US Dollar Index Futures. We've pulled back a little bit here, so you can see where the market's been. Back here is where price was trending higher as interest rates were rising in some attempt to combat the higher inflation rate. And then price broke down here. Here was the breakdown bar. And that then put a new level coming through here. It was a bit of a complex level. There was two lows, both here and here. So I'll often draw it like that. Now, if we zoom in a little bit, and here are those levels again. Through here, you can see that price was thwarted through here and it wasn't able to push through. It did look like it was going to a couple of times, but in the end it failed. And you can see here's the breakdown bar there. Now, if we bring a line through from here, you can see this was the low of a range over here when price attempted to challenge this highs and failed. And you can see it caught this level here and here. And then when price tried to recover just recently, it was also causing issues to the market. And the next level below that comes through here. You can see it caught this bar here and forced to close just below it before price pushed through. Now, this was like a breakdown bar here, but it did close a little off its low. This was 2 weeks ago. So there was some support coming in here. And this week, prices just drifted lower on quite low volume. Now, if you put the line through from the lows of the range, this whole area here was like a shakeout. But I think it was really a organic shakeout. It wasn't a engineered shakeout. It's what developed naturally in the market as a shakeout below these lows. And I expect there will be some support in this zone here in the future between 99 and 102. And that's where the market has drifted into this week. And I expect there will be at least some increased support found within this zone between 99 and 102. So keep your eye out for that. The lower market this week did give some other associated markets a bit of a tailwind, and you'll see that as we go through. E-mini S&P pulled back. This is S&P 500 index futures. You can clearly see the big uptrend in the background and the all-time highs here. You can see that the market made a challenge at the all-time highs, which are just there this week, and pretty much closed right at those levels. This is where the bulk of the resistance was. You can see that this little push here weakened the resistance to some extent, and that corresponds with this little period of absorption just here. Then price pushed up last week and then gapped over the highs and into pretty much clear air. There's not that much supply expected above this range. This little bit here, which is actually the all-time highs, is relatively low volume, and I expect there's not much supply there. It's probably been sold since. So the market gapped up this week and moved towards all-time highs. Didn't quite close at all-time highs, but pretty close to it. So you zoom in a little bit, and you can see that more clearly. Here was that challenge to this zone of expected resistance. Here was a little period of absorption and the push higher last week, and the gap up over the highs of the range and towards all-time highs this week. Our volume reduced quite a bit this week, and it's going to be the short week between Christmas and New Year coming up, and generally indexes see sideways movement during that period and they consolidate. Unless there's some reason or some reason emerges for the market to trade differently, generally the indexes just trade sideways on very low volumes. So that's what you expect unless something arrives that's perhaps unexpected. You do see stocks sometimes move substantially during this period because volumes are low, so the market can be moved much easier, but it's less common for indexes to move substantially higher or lower during that holiday period. US Treasury 10-year note futures, you can see, have been in quite a downtrend for an extended period of time. We zoom in and market made its lows down here, and we commented at the time it appeared that some modest buying support had emerged, and that increased on this up bar here, which comes through there. You can see there was a period of consolidation in response, then a secondary push higher up to the highs of the range, and then another consolidation period, then a further push higher through here, and a consolidation in response. And then 2 weeks ago, the push higher came through there. There's anticipated to be some supply drawn out from the left here, but the market didn't consolidate this week. The market attempted to go higher, and that wasn't being supported. The previous 3 times when the market pushed higher, there was a period of consolidation in response. Here, here, and here. This time the market attempted to continue higher, and higher prices weren't being supported. You can see that on the low volume. So price tried to go higher, ended up closing off its high because there was no demand in the market, there was no oomph, there was no force behind the buying that tried to push price higher. Volume can be considered as activity, but also as force or effort. And there was no force behind this week's buying. And you can see that in the low volume. And that caused price to flounder a little bit. I have to say that not as much supply appears to have been drawn out as I expected. I thought on low volume that price might have been smacked down through here, but it wasn't really. So that was interesting. Maybe there's not so much supply within this zone here as I was anticipating. That remains to be seen. I expect price will come back and consolidate this week, probably in this little level just through there. Okay, next chart is copper price futures. Copper price futures, from the wider view, have been trading sideways for more than a year. The year started there, and we've just done that pretty much. So we've been trading roughly sideways for a year, but not looking weak. Whenever markets pulled back, you can see through here, here was the original lows of the range. You got some accumulation turn up through here. It was actually pretty obvious at the time. We pointed out that buying support was emerging. Just zoom in a little bit. Here's that lows of the range I just marked. You can see here that some buying support came in, volume increased, the close was well off the low. The next 2 bars showed downside follow through, but remained within the range of this bar, and then there was an up bar in response. This was a little period of absorption just through here. Price moved up to the previous lows of the range here, pulled back forcefully and grabbed a whole lot of supply, and then immediately reversed. And that was your key, that this was actually buying support. This was a period of accumulation right through here. And in response, prices pushed higher. And you've got the next highs of the range come through here, like that, and the one after that, like that. So price is bumping up now against the highs of the range. There's not been any real serious challenge towards it as yet. Just look down here at the volume. You can see volumes have been falling. there's no challenge. This is absorption taking place just below the important level through here. And I expect there will be a challenge at some point because the market is setting up. It's like coiling up like a spring, ready to spring out and higher. And I expect there will be a challenge towards this level at some point when conditions are favourable and the timing is right. Gold price futures, you can see on this chart, pulled right back like this, where the old highs of the range came through, and here was the initial challenge, which failed pretty badly. And then price came up through here more recently and would have substantially weakened this level through here. And now price is moving up towards it. It looks like it's actually through now this week. So I'll zoom in a little bit. This is where we normally see the view. And this is where the market weakened that zone of resistance above. Now the lows of the range come through here. There's a little minor shakeout here, but a more substantial one here. This is the one to take notice of. Price pushed out above the shakeout. And this may well have been an engineered shakeout and not an organic one or natural one like we saw earlier. Here's the highs of the response, higher in response to the shakeout. There was a test of the shakeout. Price pushed higher. I can't explain what happened here. The market absolutely rocketed higher and then drew out a heap of supply. But if you note, price only came back to a really logical level here, which is the highs of this bar. That's exactly where you'd expect the market to come to, and that's where it did come to. So no damage was really done in all that. A lot of people were saying, oh, that's the end of the market. No damage appears to have been done. The market came back to a really logical level and then tested for supply there, and supply was low. Look at the volume, below average. And in response, price floated higher. And this week, prices floated higher again on even lower volume. Now, that suggests the market isn't intending on really rocketing higher, at least right now, but it does show you that selling pressure is relatively low and the market is in good position to push higher in response when the timing is right and conditions are favourable. So this market still looks fine, at least at this point in time, despite this terrible looking bar here. Silver price futures, and similar to gold, there's a serious zone in the background that comes through here like this. And you can see when price challenged it here, it failed really badly. And again through here, price didn't even reach it there. And that caused a new zone to be established just through there, which has caused issues with price here. Now this little period through here is because of that gap there. There's the gap, and gaps act similar to a pivot high or low. And that's exactly what's happened here. There was a gap in the background here that's acted just like a pivot. It's a breakdown, and it's a breakdown line effectively through there. You drew the line from that little bar there, and that bar there actually has the higher tail like that. Then this was a breakdown bar. This was the breakdown line, and it's caught the market as prices attempted to push higher. So let's just zoom in, and here's the lows of the range. This shakeout was more in response to the one that happened in the gold market. It's awkward looking. It looks like it's just been this market being dragged around in response to the gold market. So price pulled back, similar to gold, tested the shakeout, price pushed higher. Here's that ugly bar, but gold closed back at this level, or actually gold closed back at that level, and this pushed all the way back. This market's often very volatile. A lot of retail traders are in this market, and they don't respect the levels quite as well as the professional traders do. So anyway, similar to gold then, there was a test for supply, price pushed higher on reduced, but in this market, volume was still at average or slightly above, whereas gold was slightly below average and floated higher on a lack of selling pressure. This market pushed higher with a little bit of demand actually, and this week prices pushed up to the highs of the range here on very low volume. I expect the market may have liked to consolidate just here, just below this level, and attempt to push higher in response, but there was a little bit of strength being shown. This might be one of those cases where you see on a weekly chart a up bar acting as consolidation rather than, as you would normally see it, consolidation taking place as a slight down bar through like that. And in this market, it may be that the price has, say, tested for supply, pushed higher, and then has consolidated again, just at that higher level like that. You see that sometimes on weekly charts. It's not particularly common, but you do see it. Like crude price futures, and you can see this market has been trading roughly sideways for an extended period of time. There was a channel being formed through here, which continued at a lower level through there, and price overcame that over a period, but has drifted lower again. Now I'll just zoom in, and I expected just here the market was in consolidation mode and would push higher from there, which it did on this bar, but then I can't explain why it failed like that. I think it may have been some market manipulation, but who knows? But price has actually respected that level. You've got some support in the background through there. There has been some buying support emerge adjacent to this zone to the left. And over the past 2 weeks, some buying support emerged that allowed the market to push up this week. It did close off its high on low volume. So that looks like it wasn't necessarily supply being drawn out so much as a lack of effort by the market. As I mentioned earlier, there was no force behind this week's push higher. This was the market floating higher on low volume. And you can see the low volume here, well below average. And as price floated up, it probably did encounter a little bit of supply from the left, but it doesn't look like it was overwhelming. Price closed back at the level, the lows of this bar, and it was probably a lack of force, a lack of effort being able to push price back above that level. It was happy just to settle back below it, and at this point it doesn't appear that supply is chasing it lower. Look for a period of consolidation in this market next week while we're on the holiday break, like perhaps just through there like that, unless something unexpected happens, obviously. This is the Euro US dollar currency futures, and the lows of the old range came through here, and that's where the lows were developed, like this. Price pushed out. There's a shelf that goes through there like that. Price pushed up to it, consolidated, tested the breakout, pushed up last week, and this week has just floated above it on reduced volume. That suggests that selling pressure isn't particularly strong. It did have a tailwind by the weakness in the US dollar and allowed it to float higher, but there was no strong push higher. So if the US dollar was able to recover for whatever reason, I expect this market would push back and down into this previous sideways range. But at the moment, selling pressure appears low and price floated high with relative ease this week. British pound currency futures. Here's the lows of the range through here. They established themselves just slightly above that. Price pushed out and consolidated, pushed out the second time. The shelf in this market comes through there, and you can see price pushed up over a series of weeks right to this level, pulled back in an attempt to consolidate, responded last week straight back to this level, but this week on low volume you really only had a sideways inside bar. There was no attempt to push higher, and the market didn't really float higher very much like the euro did. This market traded sideways in some form of consolidation mode, and it traded as an inside bar all week. Aussie dollar currency futures. You can see the Aussie dollar currency futures did accelerate higher this week. The old range comes through there. And there was some supply drawn out from the left. That's why the market did this. This was a period of absorption, and it actually got it all done pretty quick, and price has pushed higher. The wider spread there suggests that there was actually a little bit of buying in there, although the volume was low. Generally, when price floats higher, spread is average or slightly below average, and that just looks like it may have seen a little bit of buying support in there as well. It probably wasn't overwhelming and super strong buying support, but just the slightly wider than average spread suggests that there might have been a little bit more than just price floating higher on low volume in response to the weakness in the US dollar. Just perhaps a little more. That being said, I would anticipate during this week price will consolidate in a zone just below this bar's close and perhaps just below the 68 level. Barring any further or serious weakness in the US dollar, that's where this market will trade. If the US dollar accelerates lower, well, this market just has to go higher in response. Bitcoin futures, I'm zoomed out on this market as well, and you can pretty easily see where that supply from the left is sitting. I don't expect supply will be anywhere near as high through here. There may be a little bit more up here as price gets up there, but that wider view gives you a good example of where the market is. Now, just while we're out here, this is where I expect accumulation took place. I think this was an unfortunate event that wasn't expected, and the market gathered itself up and used that as part of the accumulation in the end. This is where the broker went broke or whatever. I think the accumulation was going to take place through here, and this was an unexpected event. But the markets just have to absorb that sort of thing. Things happen in the markets. They just happen, and you've got to deal with it and get on with it. And that's what the market did, and it went sideways in response. Then it went through its normal process of challenging any sellers during this period before it accelerated out. If you extend the highs of the range across, you can see that price broke out, came back and tested. We marked the breakout level there. That caught this. Price came back. Secondary test of the highs of the range here before price accelerated higher. And all of this may have been because there was anticipation of supply to the left here. That was an attempt to shake out some of that, this extended period. These people would have been waiting and hoping that price came back to them so they could get out for break even. And this extended period through here was perhaps a way of frustrating some of these people into selling down here, so there wasn't so much supply available up here when the market did move up. And price did move up. Price went into absorption mode originally and then accelerated up to the highs of the range and has been consolidating over the last 2 weeks. And it's looking pretty good, to be honest. It's looking fine. Last week pulled back, closed well off its low on reduced volume. This week tested for supply below the previous bar's close and then pushed up on a slight increase in volume, but still below the average just slightly. This is a nice little period of consolidation, and when the timing's right and conditions are favourable for trading, I expect this market will attempt to push out. I don't think there'll be any serious supply here or here. There may be a little bit stronger supply up here if and when price gets up there. But this market is in consolidation mode at the highs of this range. It does appear that the supply that was trapped at this level has probably been absorbed now, and that will allow this market to make a challenge towards the 50,000 level when trading conditions are favourable. Okay, back to the US dollar index futures just quickly, and you can see where the lines go now pretty clearly. You can see the breakdown bars. I expect this market will attempt to find support in here between 99 and 102, and I'll be surprised if this market just races through and slices out the bottom. That is really unlikely to happen. I think that the market will make a pretty decent attempt to support the market within this zone here. It may not be successful in the end. I just expect there will be a pretty decent attempt to support the market. The market may come back down here like this and then respond higher like this. It may not just be a straight sideways move. You may find price comes back, then moves higher, back, moves higher, and then you'll see whether price is strong enough to recover or break down. But there's going to be an attempt to support the market pretty much between 99 and 102, and that'll push the other markets sideways, or they may be able to push higher initially if price continues towards the lows of the range, but then this sideways movement will probably cause them to also move sideways in response. Okay, that's the lot. I hope everyone enjoys their holiday break and a little bit of time away from the markets to clear your heads. I'm probably going away for some time during this little break. It's not confirmed yet. So if I don't turn up next week for some reason, it's probably because I'm away, but I'll certainly be back the week after. And if I don't go away, I'll just do something next week anyway, albeit perhaps it'll be shorter because I don't expect it'll be a particularly interesting week. But we'll see, you never know. Thanks for your time, thanks for the year, and we look forward to next year's trading. Thanks, see ya.